Hey guys, welcome back to another weekly analysis, weekly video here at Financial Hub Forex Academy. For those who know, for those who do not know, my name is Caleb Sam, part of the founders here at Financial Hub. And today we want to do things differently. We want, like we said, 2024 is a year of doing things differently. And today I have another guest back with me who you've seen here before. He's been here before, but this time we want to get into the technical side. Last time you had his stories, and this side we are doing sort of a collab Forex analysis together. Want to go through the markets together. I ask him questions, we go through mine, he asks me questions. We just want to chambuana. At the end of the day, trading is all about, and the reason why I'm doing this also is because I want you guys to see that trading has different approaches. Don't think of trading as one approach. There are a million ways to make $1 million. Same way in trading, there's a million ways to approach the markets. It all comes down to the perspective of each and every individual. And just because I use a certain strategy doesn't mean your strategy is wrong. So today I want to do something with Kev. From last podcast, and Kev will introduce himself. We have Kevin today. I forgot to mention the name. And Kev from the last podcast, if you know, he's an ambassador of Falcon FX. Falcon, this is under the leadership of Mark Hutchinson. Kev will talk more about it. But Mark is also someone I respect. When I started trading the first few years, he's someone who has been consistent in the game. I used to follow his analysis and understand, because what he does resonates with what I do. It's more or less market structure, looking at structure of the markets and such stuff. And that's the same thing Kev does, and that's why we're doing this collab, because we are more or less intertwined, or more or less almost symbiotic, similar analysis approach. But you want to see Kev's is different. He approaches many more markets, and I want to show you a different perspective. Most of you have been saying that I only trade very few pairs. Kev trades more pairs, but I want to show you how he breaks it down to having a few watch lists. You call it what? Watch list? Yeah. A few watch lists, then his main pairs that he's going to be trading this week. And I'll show you an example. Like this past week, I remember he had certain pairs he was looking at. There was a gold setup which he had seen an analysis, but it wasn't part of his watch list, right? So he didn't end up taking it. So trading has different approaches. So that's what I want us to do today. You look at his approach, different styles, and how he breaks down the market for us. Then I'll be asking the questions that most of you want to be asking. I'll be asking them for you here and then. So, Karibu Kev.
Thank you so much.
Excited for today. I've been telling Kev when he arrived that I've been looking forward to this. We just thought about it this week, yeah?
Yeah.
We haven't been talking about it much, but we just thought about it earlier on this week, and we said, you know what, let's jump on a... Well, not really this week. Let me not say that. I'll be lying. Some weeks back, Kev had said he also wants to start doing video analysis, because he's been sharing his weekly breakdowns on written format. Yeah. But now it's taking up a notch. Ni kujaribu. You try and see if it works for you. And then that's what we're doing today. So, and I remember I brought Kev some time back for one of my classes where he explained his strategy and how his approach. But today we want to bring it to the mass and to you guys as well. So karibu Kev.
Thank you so much, Caleb.
Yeah.
Yeah, it's a pleasure being here once again.
Mm-hmm.
I've been looking forward to this session since we talked about it. And yeah, it's interesting. It's interesting because I'll get to see I'll actually get to see physically how you think, how your thought process is when you approach the market. And you'll also get to see how I approach the market, and you'll get to understand how we look at things.
Mm-hmm.
I think this is a good one because in the community, in KST, people get to hear that I trade a number. I
Many
trade
pairs.
around 28 pairs, and they're like, they can't even wrap their mind around that. They're like, all those. How do you even go about it? So this is a really good session because it will also itatoa your limit, your belief. You only need to trade a few pairs to be profitable. You can trade a number of them. It all depends on how you approach it. On you now generally getting to understand your strategy better, to look for quality over quantity.
That's true. Yeah. That's true.
It will be
so you have quantity, but you break it down to quality.
Yes.
Okay. So that's good. So guys, it's going to be an interesting one. Kev is going to share his screen. He's going to break down a few markets, his approaches. Do you look at fundamentals? before
No,
you
I'm
just
purely technical.
purely. So Keva said it first. Sometimes on our side you can hear us saying we're looking at this fundamentals start of the week. Very few. I don't use technicals. I believe for me everything is embedded in the price action.
Yeah.
So fundamentals for me also is embedded in the price. Sentiment, mass psychology, it's all, you can see it in the markets. You know, the mass sell-off, mass what do you call irrational exuberance when market is just in crazy high prices. So Keva said it. He doesn't look. He's purely fundamental.
Technical.
Purely technical. Kabisa. No fundamental. Kabisa at all. So all your 28 or whatever pairs, purely technical.
Yes, but again, as much as it's purely technical, there's the aspect of news.
Yes.
Yeah, so news is more or less...
You're aware of it?
Yes.
Yeah, okay.
So I'm totally aware of it. Like, for example, you have the elections coming up, in the US. And that's a time that I will not even be looking at the markets. So I'm also
So that means no trading that time?
Yeah.
Okay.
So I'm also aware of whatever is happening around.
Yeah. So, okay, elections happen once in 4 years, that's in US. So when you're looking at, let's say, because monthly we have 8 times in a year, we have FOMC, that's interest rates. Every month we have NFP. Do those affect your trading approach?
Yes, I do not trade at all. If at all there's NFP, if at all there's CPI, if at all there's the FOMC speaking, I do not trade at all. So if at all a position has shaped up, actually I'll show you a position, a beautiful one that shaped up on euro dollar when there was NFP on Friday.
Yeah.
And it sold off aggressively for around 7%. I did not take it. It's something that totally fits my strategy. It's something that totally fits my plan from top down all the way to my entry.
Yes.
It had everything that I would have been looking for.
So but you don't look to trade. Because I remember that time when NFP came out, I remember the dollar was rising, euro, Aussie, those crazy fall.
Yes.
Okay. So you look at them to stop trading, but you don't look for it as an indication to take a trade.
No.
Okay. So
Actually, if at all I am in a position that is running, and we are some 30 minutes to the news, I'll manually close down that position. Even if I am
win or loss,
even if it's just running at break even, if
that
it's
rule is mandatory.
It is mandatory.
So is this?
I close it down. Even if it goes in my direction or not, I don't care.
So is this a Falcon thing or your thing?
It is a Falcon thing.
Yeah.
We usually just stay away from news.
Makes sense.
But again, it also just comes down to you as an individual.
Yeah.
Yeah, because as much as it's a Falcon thing, you also need to be disciplined enough to follow that.
And to figure out your own approach.
Yes, because if at all, I have been doing it for 15 years. Mark has been doing it for 15 years, and he stays out of it. So why should I?
Okay. You learn from his experience. Yeah. No need to try and change the wheel.
Because Caleb, let me tell you, if a master chef comes and gives you a recipe and he tells you do this way and you'll have this meal, and you just try and change a little tweak in there, you won't have the exact meal that he shared. So why would you try and change the recipe? Okay.
So you go with the recipe and you may pair with the professional.
Like gospel.
Okay. And on top of that, before we get into the technical, we've talked, that's on the dollar. You trade many exotic minor pairs, many of them. I see you sharing in the community. So also those ones, are you looking to follow the news? Like let's say I can see you have CAD, CHF, or you just mainly the one that puts you out is the dollar news, which is very volatile.
Yes.
Yeah. So but for the other ones you okay. So
they're not of that much consequence.
Okay. So guys, so you've seen Kev's approach. Without further ado, let me make you host.
Okay.
So that you can share your screen. There you go. I can share your screen. We look at a couple of things. So guys, take your books, take your papers, grab some coffee, and listen to what Kev has to say. Maybe I can go up with mine. My work is just to ask questions and pick Kev's brain. So Kev, I'll pick your brain as much as I can. Just it's nice to can come screen to that one,
Okay, there we go.
So let me see if it's recording here. Awesome. Awesome. So we're live, guys. So that's Kev's analysis. You're used to seeing ours as light. Kev does is different. What colors are this? What template is this? This is the dark template, yeah?
Yes. This is just a personalized one.
I can see, of course, the bearish candles are red. What's the color of the other ones? Are they hollow?
Yeah, they're just hollow.
Okay, so.
The body is just the one showing.
Okay.
Yeah.
So take me through your weekend analysis. We can see the pairs you have. How many are these?
28.
All these are 28?
Yes.
Okay.
You can see.
So guys, Kev is going to break it down for us. Today he'll explain how he does his breakdown. So, and I respect it. When we met with Kev, we've been having this back and forth. Kev, you go east side, Mimi go east side. So we are not really extreme opposite, but more in terms of, we'll talk about it as the video continues.
Just some small discretion.
Yeah, just kidogo tu. Yeah, disparity. Very few that. But anyway, take me through. Do you decide to start with any major pairs, or you just start?
I just start.
Okay.
Actually, they're sorted alphabetically.
So you follow it alphabetically?
Yeah.
Okay.
From the Aussies all the way down to the dollar pairs. So first of all, I start off with the DXY just to get a general bias. I look at the market from the weekly. So from a weekly perspective,
so you do top down?
Yes.
So on the weekly, what are you looking for?
On the weekly, this is what I'm looking for. I'm just looking to see how the previous week candle closed.
Okay.
That will give me a bias as to what I'm looking at for the upcoming week.
So you're just looking for the weekly candle close? Okay.
There's also the larger structure to play, so that you just have a general bias, a long-term bias as to how you're looking to play it.
Okay.
So, for example, on the DXY, we had this sharp point over here. It's more or less a week on the weekly. On the daily, when we zoom in, you'll see that's a week. Not really a week, hook point, but you also have this sharp one that's just sat above. And price did leave a gap into this area.
Mm-hmm.
So that is something to be aware of, because more often than not, price does come and fill this gap before we commit. And if at all you do draw on structure to this, you can see that we have structure just breaking above that. Sorry. Yeah, there we go.
Mm-hmm.
So price could just as easily come, break above that, wash orders out, then we sell off very clearly. But the only caveat to this is that if you measure the size of this impulse down and the size of this correction over here, this correction will be larger than the impulse. So this will be more neutral. That's it.
You mean in terms of time frame, it will be larger in terms of what?
The size. Look at the size of this correction.
Like the width?
Yeah.
Okay.
Look at the size of all this compared to the size of this.
So that's with respect to the time?
Yes.
The time, okay.
Yes.
So
even if you use our fibs, you'll notice that it will have retraced more than 50% of that level.
So do you use fibs a lot?
I just use it for retracement purposes. I don't use it, and also for my management. But I don't use it to get any bias or...
Okay.
Yeah.
So you're mainly looking at that 50?
Yes.
What about it? So looking for market, you don't look at the golden ratio? 61.8?
Yes, there's that, but I only use that. I'll show you how we look at that.
So
On another pair. If at all we just use the fibs, we'll see that this price is retracing more than 50% of this, of this impulse down. Make this as such, making this larger than the impulse down. Yeah. So this flag continuation becomes more neutral per se, if I dare to say. So it has a possibility of pushing back to the upside or just committing. So that's just a general view that I have to that. But
by
again,
committing, you mean to commit
to the downside.
To the downside.
Yeah,
okay,
yeah. So there's this gap that was left into that, and there's also this gap that was left. So
being aware of that, both gaps to be filled?
Yes, being aware of that, I am more neutral on this pair, given where we are at right now. So if we just zoom in to where price is at currently, I take my real line, draw it on to this sharp move up. price sold off, left this footprint, then sold off, left the gap. Now, this is what I was telling you about management. If at all I am to use this as the area of interest, essentially we have marked on over here, this is my area of value, because this is essentially my last line in the sun. If at all price does push up and break above this, I'll be so keen to see what happens, because you might just get a false breakthrough. You might get a successful push back in and a follow through. So this is a very interesting area, just like the area we are at is very interesting right now. So if I drop down to the daily, the weekly did close on a bullish low test, high test.
So before you continue further, and something I like asking a lot,
Go ahead.
In trading, there's always, like, whenever you're trading any pattern or any, like, these gaps you're talking about, those levels that your areas of interest, your hook points and all that, there's always a reasoning behind it. And it's important for people to understand the reasoning. So in terms of your gaps, why are you looking for those to be filled? What is it that has been left? Because I hear you saying footprint a lot. Why that level? Because there's some people who are just looking for markets to fall all the way down here, fall all the way up here. So why those gaps? Why do they form? And why are you looking for them to be closed before any directional bias? Because now you said you're neutral.
Yeah, I'm neutral because given these gaps, and I've said from how I look at it, there's volume sat here, and there's volume that was sat here. So when price was pushing up, take it this way: price is always seeking liquidity.
That's true. I agree.
Price is always seeking liquidity.
That's
so
true.
Price came up, collected what it was seeking over here, and it sold off. Yes, but it still did leave a gap and pushed back to the upside. Yes. While selling off, it did leave this footprint, this sharp move up over here, then kept selling. So essentially, this was the inception of this sell-off over here. On the daily, this is a very aggressive sell-off. We'll we'll go down to the lower time frames, and you'll get to see that.
And one more question before you go down, just here, let me draw it for you. Just as a matter of understanding the drawings, or rather the approach, because you can see here we had a footprint, like you're saying, a footprint was marked. Market come back that level. Now you're watching that level. Now what about this level? Was this like a footprint of this move? Like this is a smaller version of this. Okay, in my opinion, what I'm seeing with what you're saying. What about this point? What about this? How would you approach this that time before this came?
So let me just answer that. So when price was selling off, it approached this. You see, price pushed up, left that footprint again, and went. So this was an area of interest to me when price was selling off. So price came, broke above it, liquidity sweep. I don't choose that one. But yes, pushed to the downside.
Failed to close.
Yes, failed to close. Closed above this area of interest to me, and it closed quite bullish. Yes,
that's
so I was looking for price to follow through. So while price was also selling off, you can see this week. Yes. So that was also an area of interest.
So is that what you call a footprint?
Yes, this is what I call a footprint. Okay. So price came back,
to that
tapped
level.
Into that. It's just like it's gravitating back into that sharply. You see this sharp move up. Then it sold off. But how did it sell off? Correctively. If I invert my chart, you'll clearly see this is a they call it a wedge. Yes,
the wedge pattern.
This is a wedge.
That's true.
And this was breaking above this area of interest over here that I have.
Okay.
So this is just additional confluence. And at the third touch, look at how we closed. With a retrace. A very clear one. So I was looking for this price to rally at least to 90% of this structure. But it did come, break below that structure, and then collected volume, which pushed back to the upside.
So that's why we're seeing that accumulation?
Yes, that's why we're seeing this accumulation. And the beautiful bit about this is if I drop down to the daily, over here you'll see a sharp move.
One thing I'll commend you, and I hope you guys learn from it, is the neatness of your charts.
Thank you.
There's no much going on. It's not also me, because I see a lot of people coming here to the office and they're like, look at my charts. Man, I just see the charts, my head It's too much. So I commend you. So this is nice. It's even good. It's fun for me to look at. It's not too confusing. So kudos.
Thank you. So yeah, so while price was selling off over here, it came, left this footprint, sold off, left a smaller one, then kept selling off. Left that, pushed down correctively, gravitated back, did not clear this. Okay? So that's one instance. So now this became our footprint. Okay?
So we've left the others.
No, this is still valid.
Okay,
yes, they're still valid.
Okay.
But now, as
we
price
go
is
using the new ones that form.
yes,
Okay,
yes. As price is pushing lower, we keep considering those. You remember this sharp push up? Yes.
Yes.
So price came, essentially tapped into that. You can see this. This is a trap. Yeah.
Yeah.
Push down,
So many
then
people bought
retrace.
there.
So people are looking for buys over here.
Yeah.
But personally, I did not get my permission to enter because I have been looking for something I call an insurance entry.
Insurance entry.
Yes, which is basically I'm waiting for the market to show its hand before I enter the position. So price tapped into that, broke below, broke back in. So it would have been looking for continuation over here, essentially on our structure.
Yeah.
Because price showed commitment on the daily.
Okay.
Yeah.
Yeah.
That's just a plan that I have. So this was of value. Price sold off, corrected over here. You can see that volume accumulation.
Yeah.
Broke just above. Essentially, it was seeking this liquidity that was sat over here.
That's true.
Never cleared it. It left that gap. So
Okay.
what are the odds that it will still come and search for that
Liquidity.
area? Yes. So let's mark it on. So let me just.
Exactly what happened. Good.
So you can see this gap.
Yeah.
That's
what now was filled.
Yes. Now that is the same criteria that I'm using these areas.
So it's the small. It's just expanded now. Yeah. Okay. So
just
on the bigger
marketing,
picture.
Yes.
So
price sold off, left that gap, pushed down, then it snapped back into that very sharply. There's no structure to this.
Yeah, there was no structure.
Yes, filled that gap that was left.
Yeah.
Collected the liquidity that it was looking for. Sold off. There would have been entries over here and entries over here as well.
Now on the lower time.
Yes, on the lower time frames. Pushed down, completed that range play, pushed to the upside. When it was selling off, you see this sharp move up.
Yeah.
Sindio, let me just clear that for you to see
that correction. That
sharp
correction.
then went. So there was this area of value which was still not filled. Okay. It won't always be filled, but majority of the times it will be filled. So price completed that push up. There was a potential 3-touch play over here that I would have been looking for.
Does this, with respect to your approach, but just a question, does this have any similarity to ICT? Because I see people looking, I don't know much about it, but they look for such corrections back to that order block, sort of that, almost that gap you're talking about, that level. For those who know, please comment on the comments below to ICT, SMC. But do you think it has any? Or you're not familiar with it as well?
I'm not familiar.
Okay,
so I'm also interested in the comments.
Please tell us.
I'd love to know
See what was structure for you. But sour.
So while it was pushing up, this was an area of interest to me. This, but also I had this as my area of interest. This was essentially my override. So just to have
what do you mean by override?
Okay, so let me just draw this on for you to get a clear visual of what I'm saying. So a lot of the times, how you look at it, say we have an expanding structure forming. An expanding is just a structure with higher lows and lower lows, higher highs and lower lows within the pattern.
Yeah, true.
So price sells off, comes, there's that, comes, and then now essentially I'm looking for price to do what? Give me the third touch of that structure. For me to be looking for shots. Yeah. So at times it won't always get to this structure. Okay? To that third touch. What it will do is react off of this previous high. Essentially form some sort of double top. Then go.
Okay.
So now this is my override area.
On that point, because there's a video I did a few weeks last year. And I was trying to give people a perspective on the same thing you've just said, but you've put it in a different way, which is good, in terms of double tops and double bottoms. I came to the realization, when you read books, you're normally reading and they're saying, when market is moving in an uptrend, we form a double top, sell. In a downtrend, now I found it to be the opposite. Best double tops are found in a downtrend, and best double bottoms are found in an uptrend. Is that the same thing you're saying?
Yes.
Awesome.
That's actually something very interesting. I'll show you something on Eurodollar.
Okay.
Eurodollar formed a lot of double tops.
In a downtrend.
Yeah, but more or less they formed in some sort of V shape, where it pushes down, leaves this, sells off, then comes back sharply, then goes.
That's still a double top.
Yes, this is a very clear double top.
That's a very good shorting place.
I'll show you a lot of it, like 3 positions that shaped up the exact same way. Now with this, how I look to take them, I can take a risk entry over here, but if at all it's that sharp in its push up, I'd be looking for the insurance entry, where essentially I wait for market to show its hand, give me confirmation, then I look for a flag.
A short correction there, then
on the lower time frames.
Awesome.
So there's that. I'll show you that instance. Just look at this DXY.
Good point. So over here you're looking for those 2 levels.
Yes.
This gap to be filled, or more or less that. Is this also like a hook point?
This one's.
Yeah.
This is just price for structure.
Structure. So either it can. So for this one, for example, just a sec, you mark. So you're looking for here. You want to see structure, how it will form over here. Price action.
Yes.
Reject that level, or if it breaks, you want to see how it will respect this level. Close back below here. Get an insurance entry, then enter.
Yes. So on both instances, I'm just looking for an insurance entry because we have this as our possible play, but this as our most probable play.
Awesome.
So we have a possible and a probable outlook. Yeah. So you won't be surprised with whatever the market does. So you're prepared for both.
Okay. So which is good, because you're not trying to forecast what will happen. You're trying to see what will happen first. And then now you respond and what might happen. Yeah. Then you respond to what happened.
Yes.
Okay. Awesome. Good stuff. Good stuff.
So let's clear that. So let's go back to what I was essentially saying. So I was looking for price to come, give me my third touch over here, then we'll be looking to go short. But it never did any of that.
True.
So reacted, went short, essentially breaking below these lows.
Yes.
Then pushed back to the upside. Yeah?
Yes.
Now this is just where there's a lot of mass psychology.
Yes.
Because let me just ask you something very, very clean. This is interesting. No, this is a very good lesson. Let me just mark that on so clearly. Look at how aggressive, look at how heavy this price was selling. Look at the momentum over here. So think of it, when price was selling, it broke that structure this way, and we had that. What would have the masses been thinking over here?
Sell.
Hey, we are going.
We
are going, Bana. We are going.
Breakout.
Yeah.
Because over here, most of the time you might find just a little bit. You'll find that most people have the structure, this one, like, what do they call it? A descending triangle. So they have this pattern, immediate textbook trade, what they've been told, not practical. Breakout of this one, just sell. Or rather, what they're looking for, breakout, if you just retest and touch here, sell. So that wouldn't be. That's what we call fast level thinking. Now in trading, I really believe you need that second level thinking. And second level thinking comes from being patient and seeing what the market is telling you, rather than having that FOMO. This one just broke out, let's go. So I get your point.
So there's that. So a lot of people will have been looking to go short over here.
That's true.
Yes? So personally, if I was to go short over here, I would have waited for the market to give me a continuation.
Yes.
Pattern.
Yeah.
Just to play the market conception of impulse, the market nature, impulse correction, continuation.
Yeah.
So if at all we had a correction over here, I would have been looking to go short on that. But price failed to follow through this aggressive breakout and pushed back to the upside quite convincingly. Now there was this run.
So what's your point on, if you remember last week when we were at our career day event, I remember you were there. There's a lady who asked, and I answered that question. She was asking about price being king. What's your thought on that? Is price king?
Yes.
Awesome.
So price dictates everything that happens. Awesome. Even if you look at indicators, actually which are lagging. I think you guys have noticed, I have no indicator.
Same was up.
Might be working for some people.
Yeah. We're not saying it doesn't work, but I get you. Because also any indicator comes out of price action.
Yes.
moving
All of
average,
them.
MACD, stochastics, it's always like you're saying, it's lagging because it needs the price action to come fast. Then it forms that, using the formulas, forms that indicator.
Yes,
So,
yes.
get you.
So yes. Now
So you're saying we had that rally?
Yes, we had this rally. Now this was something I don't usually trade the DXY. I usually trade the euro dollar, which is the inverse of it. So this is just to add for additional confidence. So this was a very beautiful.
There's someone who asked me, because also I do the same dollar index, just looking for structure and all that, then giving me a bias on the other dollar pairs. But does it act like an indicator sort of for you?
Yes.
Okay.
Yeah, it actually, most of the time, it does give me my bias.
Awesome.
Yeah, it dictates the bias.
Okay.
So we had this reversal pattern. This 1, 2, 3 over here, the wedge, the descending wedge into that value that we look for this one. Yeah. And price went. Yeah. Now here's how I use the fib for my management. So if at all I am to draw this impulse all the way to where I was looking at, which was this first footprint that was left, you can see price completed 90%.
I remember you mentioned that earlier.
Yeah, you remember mentioned. Price completed 90% of that play before it then pushed back.
So when market reaches, so there's a high chance a lot of people are taking targets.
Upper, kwa so.
Okay.
Okay.
Kwa so ama kwa 90? Or within 100, that zone?
Yes, within this area. Because if you look at it, is it the market? We know how market inachezanga na sisi. Sindio? If at all you look at it, there's this gap that was left. Now don't even consider the gap. Price had completed 90% of this run. Yeah. More often than not, you can go and backtest this and confirm. Price has a 90% chance of completing 90% of this run, given how it breaks out of the pattern that had formed. Okay? Mm-hmm. If you look at the pattern that formed over here,
so how I'm seeing you drawing your stuff, and a lot of people ask me this. Yeah. For you, I remember you also told me when you're drawing your lines and all that, you purely stick to the wicks.
Yes.
The wicks. You don't squeeze it in.
No, unless the wick is abnormal.
Abnormal. Oh, like a crazy one.
Yeah. There are times you'll see which is more or less formed by during news. Utaona wick imeshoot huku.
Yeah.
Kwa hiyo price ingine yote there's no
hakuna time you feel that. Yeah, I get you.
Imeacha kikubwa.
Yeah, I get
but
you.
You'll still notice that week will come to be filled later on.
Yeah, I agree.
Full price.
Yes. True.
So yes, I just drew them on. When it broke out, price broke out of this structure over here very impulsively. You can see this strong bullish.
It tried to reject, then strongly broke above.
Yes,
and I'm sure that level really took a lot of people to take shots, because I can see if you can expand it a little bit, there's sort of like a shooting star candlestick closing there before that big candlestick you're talking about.
Yeah. Now, an interesting thing is when market sold off over here, it left this footprint again. Sold off. Okay? So when it was coming up, look at the mass psychology over here.
Yeah. A big trap.
Yes. Break above. Yeah. Then we had the sharp move. This is a trap.
Yeah.
Another trap.
I agree.
So
that's why I personally, you will look at mine, but that's why I use a lot of what you call the Dow theory. For me, that's a big trap. So
that's also a trap. So personally, this is also a pattern. As much as it is a trap, this is a pattern that gave me a position on the dollar, because you can see price pushed. There was that footprint, sold off, then gravitated back into that level. Cleared that.
So better seen on a lower time frame.
Yes.
Awesome. Okay. And that's where, for me, that's like a double bottom in an uptrend.
It is a double bottom.
In an uptrend. Yes. Awesome.
So price came, did its thing over there. There was structure over here, which I did not take. Some very, very clear pattern. Because at the time it was super messy.
Oh, okay.
You can see it. Yeah, very clear one. But given the size of the impulse compared to this, I was
like what I'm saying up there. What are your thoughts on market gaps?
They will be filled. More often than not, they will be filled. Price always fills them.
Okay.
Yeah.
Like Do you put a time frame to it, or it can take
No,
some time? Okay.
It can take some time. You never know when it will get filled.
So-
But if at all I see such a move, a short impulse, then I see such a big correction, what are the chances that this sells off?
Mm-hmm.
If you look, let's now another just quick lesson. If we look at the sequence of play, see we had this sharp move up, price came back, tapped into that,
Yeah.
and now we were looking to go short when we had confirmation.
Yeah.
Yes. So if at all price formed something like this,
Pattern.
yes, would you look to take that? No, because this could evolve. Personally, I will not, because this could evolve into so many things. But think of it this way: price pushed into that, pushed down, formed something small.
Okay.
Okay.
That's better.
This is better
To look for a
yes,
short.
to look for a short, because go check all those impulsive plays. You don't get this at the start of major runs.
Yeah.
Yeah, you don't get that at the start of major runs. But if you see
Yeah,
this,
small
then
one.
price pushes down. You'd
Yeah.
expect now a larger structure,
Yeah.
and when we sell off, probably
Yeah.
now a more larger one.
Yeah. More or
Before we
less.
go, yeah.
In the forex market, they call it alternation. Yeah.
Yeah. So, given that thought process, if at all we look at what formed over here, I will not be taking this. I stayed out of that.
Okay.
So price broke.
Yeah, also for me that would have been a tricky one, because I've also, for me personally, you see market has been moving up.
Yeah.
There's that gap you're looking for. For me, I'm still looking for market to move in the direction. So this, for me, let me just a sec. This is not a strong impulsive move for me also to start looking for corrections to take more shots. There's a high chance for me this could still continue moving to the upside. But the fact that now it came later on, I'd rather wait for better confirmation, like you're saying, better impulses, better movements to the direction the market is moving into for me to start now looking for shots. Yeah.
Totally makes sense. Actually, if you look at it this way, we had this first touch, sold off, came, we had this middle section over here.
But
For our second touch over here, sold off. Now this was a third touch of this continuation to the upside.
yeah.
Yeah, so we had the impulse. Now this is also another trap.
Yeah.
Personally, I will not be taking this. You see how aggressively it sold
Yeah.
off. So I will not be taking this over here, because this is just signal price action. I do it for the market to give me confirmation price action, which came, which actually never came. Given this is not a retrace. Because for me to consider it a retrace, a valid one, it has to retrace more than 50% of the move down, of the candle that pushed down.
Yeah, so
Yeah. So this was no indication for me. So I stayed out of this. So price just did that, then came and broke out of that. Now we were looking. Now I was looking to go short.
awesome.
Okay. Another reason why I would not have taken this is this gap that had formed.
Yeah.
Price could just kept trickling to fill that.
Feel it.
Yeah.
Sell off.
So
I get
there was that.
Yeah.
Price sold off, and again, look at it this way. Came, accumulated some volume just below these lows. This was a good position to take. Then sold off, left that footprint again.
So
Sold off. What did it do? Gravitate back into that.
That level.
Collected liquidity. Then sold off
double top.
aggressively.
In a downtrend.
Very clear double top.
Awesome.
So that was another position to get involved in.
Okay.
Then think of it this way. If at all this was our area of interest, this push upper, let's measure this using the field. Just there looking to play that range. That it got to around that 90%.
Yeah,
Did
that
not
zone.
clearly tap that. Then
Yeah.
it pulled back to the upside.
So
So that's how I also use the fib,
Yeah.
just to get a visual perspective of where to be aggressive with my management. And currently, funny thing is price did come and also leave a gap to this.
okay. Similar to this add-on that's
Yeah.
up here. Awesome.
Just something similar.
Yeah.
You see,
Similar to the other one.
a
Yeah.
sharp gap,
Yeah.
hook point, gap, then pulled back into this sharp move that was left. You see this? Now it has manifested into a larger pattern. Now we have this, and price has gravitated
To
into
that level.
Yes.
Mm-hmm.
So if you look at it on the daily, there was some confirmation over here with this retrace candle. Yeah.
Yeah.
Yeah, so I was looking for continuation over here, but price kept stalling and stalling, so now I was patient. I was not essentially looking for exact confirmation over here. I was waiting for a successful follow through.
Yes.
So that I then look for continuation on the lower time frames.
Okay.
So my general perspective on the dollar is that we still need time over here.
Okay,
Given
so-
how the weekly closed with this bullish pin bar, it's still bullish.
Yeah.
This is still bullish.
So you
as much
consider
as,
that a bullish pin bar
yes,
or bearish pin bar?
this is a bullish one.
Okay.
Yeah, it's white.
Okay.
Yeah.
Okay.
It's not bearish. If
So
at
what
all
does
it was-
bullish pin bar? Okay, like this other one up here, because that's a bearish.
That's a bearish one.
No, this is a bullish one.
Yes, this
So
is a
what will
bullish
this one indicate different than that one?
This is just a reversal pattern in an upward moving market. This might still not be valid. But now, if for next week we get a similar pattern that closes this way, albeit bullish, bearish,
Yeah.
now we have a tweezer top,
Yeah,
which
yeah,
is
that's
more
true.
than enough confirmation to now look for shorts.
Okay.
But given how this is stalling, we might just still push to the upside and come, fill this gap that was left before we now consider looking to go short. But it does not have to do that. Price can still just sell off from here.
Yeah.
So if
But so now you're waiting for more
yes,
confirmation.
I'm waiting for confirmation. So towards Wednesday, Thursday, we might have a confirmation. So
Bet.
in the midweek market review, which I'll send to the community,
So-
I hope we will have confirmation by then.
Okay.
Yeah. So that's just my general view on the dollar. So just a quick one, a quick run
Yeah,
through.
we can do a
on
quick
the dollar.
run through on the other one.
This was the play I was telling you, the bullish run on the DXY. Now let me show you something very interesting. The double tops that you were talking about.
Okay.
There are so many on this run. If I told you to take lessons from this run, something very, very interesting.
For sure.
So we can clearly see the same thing that formed on the DXY, Hapa. The wedge into this sharp move up, came, broke above, pushed back in.
Failed,
Now,
follow through,
yes.
close back down. Good. Another trap for buyers.
Another trap.
Yeah.
So when we look at it this way, let's just study this run. Price sold off, collected some volume, temporarily sold off. Then what did it do? It snapped back into
level.
that sharp. So there are times when price does this,
Yeah.
sells off, then comes back, then
I
goes.
Totally agree.
And there are times when it does this, sells
Sell
off,
off, come
comes
back,
back,
sell
and
off.
goes.
I totally agree.
These are your bread and butter trades. You take this every now and then. But again, price doing this, forming some sort of hookup to go. This go more aggressive than this.
Okay.
Yeah.
So, and which ones are more often?
This one's.
The ones you just drew.
Yes.
So,
These ones happen so often.
okay.
So yeah, you can see that this is clearly a double top.
Yeah. I totally agree.
Went. So there was also this price came that
back.
footprint.
Yeah.
Sold off, then pushed up. This high did not take out this high over here.
Yeah.
Sold off, pushed back. This high essentially took out this high, but left a gap into this high.
That one.
Then sold off again temporarily and
Yes.
came. What did it just do? It gravitated back into that footprint.
Awesome.
Now the beautiful thing is it did that with structure.
Yeah.
With 1, 2, 3. So
beautiful.
there were entries over here which I took.
Yeah.
Actually, I took, not would have taken.
Yeah.
There's
And
also
another
an entry over here.
Is that your other insurance?
Yes, now this is
Entry.
the insurance entry.
Awesome.
You don't essentially take this as a risk entry, wait for the market to show you its hand.
Yeah.
So it pushed down and now this is the insurance entry.
Okay. So the first one entry
Yes.
is more risky than this other.
Yes.
Get you.
It's not that this one it has a lot of risk added to it. It's just that the element of risk over here, this evolving and pushing higher is there, as compared to this one where we already have the confirmation.
Awesome.
We're just looking for continuation and for correction, then continuation.
Yeah.
So price again sold off. Then look at that sharp move up, sold off, push
Then
up,
that level.
gone, double top.
Yeah.
Another instance of the double top. Price push down, sharp move up, sell off, double
That
top,
level. Sell.
went. Yeah.
Get you.
So it's happening a lot of the time. And also the same thing that happened upper still happened upper. It's actually super funny. Let me just do this so quick. You can see it on the hourly. Very clear. We had that sharp, and then we had this.
Yeah, structure.
Very clear. The same thing that happened. Look, footprint came this high, did not take out that high. This one came, took out. This one came, took out that one, still left a gap. Sold off. Came, cleared that. Then
Failed follow through.
who are moving this? These are not retail traders moving this.
Yeah, for
So
sure.
essentially, by me waiting for price to show me confirmation, for the market to show me confirmation, I'm not trying to be the shark. I'm trying to be those small fishes who ride the wave that the shark creates.
Yes.
Yeah.
Follow nyuma.
Tunafollow nyuma.
True.
Kwa hivyo watu wanajiita institutional traders.
Wasitudanganye.
Don't fall for that.
Yeah, true.
So just for euro dollar, major the outlook that I have for next week is price did come. If I go back to the daily, tapped into this sharp move that was left. This is essentially my value area.
Yeah.
And you can see that it's pushing up quite correctively. So I'd wait for another impulsive push, then I'd be looking for continuations over here if at all I am to take that back to the upside. If at all this pushes to the downside, for me to entertain any shorts, I want to see continuation structures sat just below this low. That is how I'd be looking to take that short.
This is the daily chart.
Yes, this is the daily chart. The daily chart. So for euro dollar, that's what I'm looking for. Now something beautiful, which I was explaining, the expanding structure just upside there.
Yeah.
That is exactly what is forming on Kiwi dollar. If you look at it from a daily perspective, there's this gap which may still be filled given that price has already come and tapped into this sharp move up. But now after tapping into this, it started accumulating volume. So what are the chances that we play this for an impulse correction, then continuation to the downside? Given that we also have this, and price could replicate what it has done here and push down into this.
So
What measure just this impulse kutoka hapa hadi hapa, it's around the 90% of that impulse down.
Okay.
So that's a very good area to look at it. Also, let me just draw this. But the market is quite mathematical.
It's symmetric.
If you just measure this run, you can see that it's sizing up close to that
level.
The size of this impulse, then the correction in that, it's sizing up to close to that level. So for just another confluence, dropping down to the 4 hour. Now you'll see this structure even clearly. Yeah.
So now this first level could be a resistance level, or if it breaks to that upper level.
Yes. So you see price accumulated volume upper. Then just outside that volume, it left a footprint, then sold off. Okay. So while selling off, it left another footprint, then sold off. Now came back, cleared that, but still did not clear this.
Yeah.
Then sold off. Now it's just trailing to the upside, and we might just come fill that, then go. So, but again, there's the override hapa. Kwa hivyo price inaweza kosa kufika hapo na inaweza fika hapo I push down, then any continuation here I'd look to take that.
Take short.
Yeah. So I am looking for shorts on this pair. Okay. But I am aware of these two value areas.
Okay. So in a nutshell, because I can see time has moved fast. Time is flying. To analyze sometimes market, it's fun. Time moves. So take us a bit back. We've looked at the dollar, we've looked at the euro. Now, when you're just scanning the markets, when you open a chart, because you have a lot, what do you look for so that you know these ones are my top picks for the week?
I just
what do you look at?
I go to the weekly. I look at how the weekly sentiment is. For the weekly, like for this pair, there's this area over here. It just looks like pushing to the upside. So I'll be looking to see how this market behaves over here. We've already tapped into that area, so this is a pair that I'll be looking to watch.
So you flag it?
Yes, so I flag it. So I then drop down.
Okay.
Look at this. The weekly.
Okay.
The weekly,
so you just go scanning first.
The weekly that I do on Friday. Then on Saturday,
Friday?
Yes, just to see how the weekly candle closes.
So do you
Friday usiku
after
market close, yes.
So midnight uko. Okay.
So I use some 2 hours, go through how the weekly candle closes, so that I can have a rough idea of the pairs that I might get to look at for next week. So on Saturday, I then drop down to the daily, because the weekly usually can take a lot of time to manifest.
That's true.
Yeah. So you go down to the daily and look at the structures that are forming on the daily, or the candlesticks that are reacting off those areas on the daily.
Yeah.
Then that way I narrow down my pairs just using the weekly, the daily, and the 4-hour maximum. The minimum 4 hours is how I just look to filter out.
Yeah, by the way, what's
daily and weekly. But now the daily
for
and the
daily
4
and
hour
weekly to filter out?
Yeah, just to filter out. The daily and the 4 give me perfect filtration. So on Saturday when I go through the daily and the 4 hour, now I get pairs that I will focus on. Now to do an in-depth analysis on them, which will be on Sunday. Why I usually do this 3 times over the weekend is because I've noticed on Saturday night the market moves. Saturday is 0000 hours, ama 0100 hours. The market moves. On the hourly, you will see a candle. Even if you opened, utaona candle move. So by me looking at it on those different times, you'll notice that how the market closed on Friday is not how you'll see it on Sunday. Yeah. So by me looking at it on the Sunday, which is when now I add my screenshots on Notion. Yeah. That is essentially when I go down to the lower time frames and I now look for the structures that I'm looking to see. So just a general perspective.
So
that is how I do. I
scan.
Yeah, on the weekly I scan it on Friday, then on the daily and 4 hours I scan
so
it
already
on Saturday.
By Friday night, utakuwa filter out a few stuff.
Yes. Actually, when I opened my chart before we started sharing, I think you saw there were a lot of flags kwanza kwa pound pairs. Yeah, which I just cleared out for.
So that's how you manage to control your 28 pairs.
Yes, that is how
filtering out.
So that in the end, if I just open my weekly watch list,
and was there
I have a top 3.
Okay.
I have a main watch and I have my wildcards. Then there's this additional pairs.
So what's the difference?
So upper kwa top 3 na main watch, that is essentially where my top 6 are. So I have a top 3 pairs to watch for the next week, which look really good in quality or might be quite ready. No, the top 3 are usually the ones which are just really good in quality. Then on my main watch, I have 3 more pairs which might be ready towards the start of the week. Monday, Tuesday, thereabout. Then on my wildcards, I have pairs that quality-wise are not that good. There's a level of ambiguity to them and some disparities in what I look at, but they are valid as to how I look at them. And also pairs that do look good but might be ready towards the end of the week. So that's where I add them on the wildcards. Then while filtering out, you might have a pair or 2 zenye zime miss out kwa watch list yangu just from an essence of quality or major pairs ama exotic, because I might have some exotic pairs zenye ziko hapo zinakaa vizuri but some major ones look also good. So unaona, so I have 1 over here ama 2, or sometimes you'll see my wildcard iko na just 4 pairs instead of 6 and those other 2 ziko hapa kwa additionals because not that certain to them. Lakini they are better off than the ones that have filtered out completely. So the ones that have filtered out completely but still have a level of validity to them, I put them on my extras watch list, which at the end of the list on Friday I go back and look at, so this is how it played out, just to get a visual of what I might be looking if such a scenario happens again. So just that. So on my weekly watch list I have 12 pairs maximum, 6 on my top 6 on my wildcards. Then as the week unfolds on a Monday, on a Tuesday, on a Wednesday, I look at the pairs every single day. There's 12 pairs that I have on my watch every single day in the morning. Then I filter out and get a maximum of 4. So I have 2 to 4 pairs on watch. I might even have 1, I might have none, depending on what is forming. So I have 2 to 4 pairs that I watch during the day. So that I essentially just focus on during the day, every single day. So so
that's when now you do in the community the daily.
The daily
analysis watch list.
So I have 2 pairs that I'm watching today. I have 3 pairs that I'm watching today.
So you've filtered from 28 to 3 pairs.
Yes.
For the day that you're watching on a daily. And during the week, as the week unfolds, because I've seen the week is an important time frame to help you filter. So share hizi top 3 na hizi watch list. Kuna lot umefilter ziko huko kwa the main list zenye hata zijakam karibia easy. So as the week unfold, you won't start looking for those ones. Sindio?
No, I don't
The
care
whole
about
week
those ones.
hata ujisumbui.
Hapana.
Hiyo tutangoja hii wiki ifunge turudi tuziangalie.
Yes.
Sawa.
I don't care about them. That's why you see on Wednesday I usually have something I call a midweek market review.
Yes.
I just come onto my watch list hapa zote 12, then I look at how they've been faring on during the start of the week. So now I get a top 6 again from my whole watch list, which I then add on to my midweek watch list.
Okay.
So even on my midweek watch list, I'll have some top 3 out of the top 6 that I have, and the rest will come under the additional pairs. But again, out of the 12 that I was looking at, kuna moja yenye naweza kuwa imemiss just by filtering. So I can add that one hapa, but it is a maximum of 1 that I have on Softwatch.
Okay.
Yes.
Makes sense.
So that's just how as the week unfolds, I look at the market.
And psychologically,
Yeah.
do you feel an essence or a feeling of FOMO when you're trading these ones that you filtered and you, because sometimes this is something that a lot of new traders can have a challenge with. Okay, I filtered down to 3 or 6, but there are 22 that are remaining or something. Do you feel that FOMO, like missing out on opportunities on this other one?
No, I don't care whatever happens to those. Actually, you remember the gold trade that you had mentioned at the start of the podcast. I did share a screenshot of how I will be looking to take that, and it was exactly where I will be taking it. Ilifika hapo na nikaangalia na they said mali market iko saizi. This is exactly where I'd be looking to take my entry. But I did not have it on watch.
Yes, so I remember.
As much as it looked so beautiful, that was me taking a trade that I did not have on my watch list. That was me.
Just go to it. Let the people see.
Okay.
They have an idea of what you're talking about.
Gold.
There we go.
This was it.
Yeah.
So what it had essentially just done is, now here comes another example of the override of the possible and the probable. You see price sold off so aggressively, left that sharp move and came. Now there was this sharp as my first touch.
Yeah.
Was taken out by this. True. A gap was still left.
That was left.
Sold off quite correctively.
Yes. And
then came back up
to that
filled
level.
that. Yes.
So this is the point, guys. We were saying earlier on when we were talking about this, and I journaled it. I remember telling Kev was telling me, Caleb, you took a trade that you would have not have taken. This is what we were discussing earlier on, and it's good to learn from that, because also if and I'll share this maybe some other time, but I wrote it down on my journal. It was a lesson to learn. Like, I knew it at the back of my head. I was watching that level, because you can see here. Let me just show you that. At this level. So guys, how I normally trade, I look for more or less like maybe a flag. Now leave this first. Let's say more or less this. Can I remove this?
Yeah,
just for a sec. Because I might not get time in this video to enter into my charts, because I can see time has moved, but just to discuss about it. So this is a trade I had earlier on this week. Lost some money on it, but more or less what I was looking at was this sort of pattern. Okay. It hooks. Okay. Yeah. So no problem. That's the pencil hook on the side. You prefer it like that? Yeah. So anyway, so I was looking for this pattern. So here, when market came, now I didn't get an entry up here, because I was still watching also for me. That's what I'm telling you. I had it at the back of my head. So I was looking. If you've seen, there's another trade analysis that I had some time previously on gold, and I remember it was a flag forming, and I told people the best short level is actually at that, like, I think it was this one. So I had sort of this pattern here, same flag pattern that I trade a lot, and market had reached here, and it had formed this. You see this close here. This was a very good sell. It was a sell idea for some people, but I remember I was talking about more or less like what you talk about. I was talking more or less about market reaching this level, rejecting it, then we get now a sell off from there. Okay, so similar thing I had an idea here. Let me get rid of this. I had here, okay, So same thing, I was looking. It's the same idea, same concept, okay? But here as market was forming, I ended up taking a short. But the better short was to look for a short up there, okay? We draw structures differently, so don't mind mine. It's a bit different from yours. But I'd be looking for a better short up here. And this was truly, like you're saying, an unnecessary loss on this trade. Do you break even on your trades when trade is running? Because
Yes.
for example, for me, if this comes here, let's say I got this trade, market has moved this impulsively here. Already, immediately, if I'm looking for markets to still sell off, I've already broken even on this trade. I never let a 50% turn into 100% loss. That's my approach for me. So, and like you're saying, if you come back here, this accumulation here was just pure information. Like, I believe if market enters into a liquidity zone, it gets liquidity, we normally see a strong sell-off from that zone. The fact that market was playing around here, this is not a really good sell-off just yet. Because what you can get, for me, what I normally look at, what I can get, I normally look at zones. So if you look at this level, you can see that market just came back to tap this zone for me. Okay? Now for me, this is still a support level. The fact that we're above it, came here, look at this structure that's forming, tapping into this level, it's still a red flag to take any or to be short at this level. Okay? But after this touch, now you can see we came, tried to sort of get that support, but we finally broke below it. So to me now, that's already now a clear level. And that's why, if you remember in the group we were talking, I was like, I'm still valid on this short. To me, it still looks like a good shot. So for me, that's the only trade I had this week, guys. I lost about a percentage. I learned from it. Kev, I think, also was very... I like the honesty. We're honest. Kev just told me, Caleb, this was a necessary trade. I believe it to be so as well. So continue.
Yeah. So just like I was saying, Praise did form this. Very clear. Just the possible and the probable. Again, we have this, even if I read this in Harper, equals second touch. This is still a structure that I play. But let's just put it here for visual sake. There we go. So Praise came, there's a probability that ingekuja na itap up at the third touch before we sell off. But again, there was also a possibility that having tapped into this, we didn't have to get to the third touch.
Yeah.
Because we'd already collected the liquidity that was sat over there, and now we were looking to go short.
Yeah.
So this candle, this impulsive candle that came and broke above that was just signal price action to me. So given how aggressive it had pushed up and how large that body was, I will not have taken a risk entry on this. Okay,
I get you.
This is the hourly. So with this week over here, that just goes to show that on the 15, that is a retrace.
So
Yeah.
I get your point. I get your
Just
point.
check it to confirm. Okay, there is no retrace, but that's still a...
So moving forward, if I get how you approach the market, okay, same thing here now. Market has gotten that level, come down. Do you come and look at this also as now a zone that's forming?
No, I will not look at that, because just look at how price is selling off. This is just correcting.
Okay.
So we might still, you see, this, no, this could be a first touch, this could be a second touch, and given how corrective this is, this sell-off upper, given how corrective price sold off upper, this could just be a middle section for price to again push back to the upside, and then we get something like this, a larger flag to the downside.
I get you.
Yeah.
I get you. And I think that's what I'm mainly paying attention to these coming weeks.
So that was what I would have been looking at. So now my confirmation price action, which would have given me permission to now position myself to the downside, was this candle. You see this bearish candle? That is a retrace candle. It retraced 50% of this move up.
So
very clear. Now it was valid. So by the price just stalling over here, I would have set my entry up and my stop just above. Okay? Not necessarily here. Just
on average,
upper.
when you get your trades, you normally get on average what RR?
That
on
is,
average.
On average around a 5%.
Okay.
5%, 6%.
Okay.
7 is decent. 6 is decent.
Okay. Minimum?
Minimum 3.
So
Kama inipay 3, I do not
don't waste time.
Staki.
Yeah.
Kama hata this one, if at all is to set my entry hapo.
Yeah.
My stop just about, that is around what? 10.
Yeah.
Targeting this low hapa.
Yeah.
That is 2.23.
2.2.
Yeah, 2.23.
Yeah.
But now that will not have been the level that we would have been looking to take my profit. Sindio? Kwa sababu kuna hizi gaps zimeachwa huko.
Okay. So okay.
So level yangu ya kuangalia profit ingekuwa huku.
Sawa.
For around 3.52.
Makes sense.
So by me just taking this trade, knowing that to this lows is 2.25. That is okay for me because inanipea room to manage. I can manage this position before we get here.
So
because I personally use a trailing stop, yeah. So when price achieves 1% in my forecasted direction,
you move.
Yeah, and the hourly candle closes, I move my stop to break even.
So
Okay.
you keep trailing and trailing
so I
and
keep
trailing.
and trailing until the market decides to take me out.
Awesome.
So there is my stop. So we sold off.
So you normally say now, when market has reached almost 90% of that level, you become more aggressive.
Yes, with my management.
So is that still like on a 90%? I mean, is it like, what do you mean by now you get more aggressive? Like your stop loss are more tight or what?
Yeah, you see, by me trailing my stop, there's a criteria I use. Probably, I used to use swing highs, but now I'm using the fib more often. I used to use swing highs and swing lows. So if price left this low, for example, then stall, then it came and it broke below this low and went. Sasa ningekuja na niweke stop loss yangu hapa, just below that low. Okay? So when it gets to around 90% of that level, sasa sitakuwa naitumia hata easy lows. No, I'll just be using the most recent highs. Okay? So take a push, ikuja cheka high hapa, na I break below hiyo nini, ikuja tena iache kingine, na toa stop loss yangu uko na iweka hapa. Ikifika huku na iweka hapo. So at all you might get to such an area, price weak out, lakini body close hapa. Then the next candle ikuwe hata retrace. I'll just put my stop loss above that retrace.
So
Ikiamui push juu nitoe na iendelee ni sawa. I have collected all this profit. Now we look to get another entry.
Okay.
So generally that's how I look at the market.
Okay.
That is my.
So as we wind up, I'm seeing Uku, you look at wheat.
Yes, I look at wheat, West Texas oil, natural gas, US oil, platinum.
That's okay. Yeah. Wheat. Okay, these are futures, commodities.
Yeah.
Okay, nice.
Platinum has been behaving beautifully.
So when you look at them, do you trade them?
No, I'm still doing my research on them.
Okay.
I do not trade them just yet.
Makes sense.
Yeah.
Okay.
But look at it even from a structural perspective.
Just
push down,
I get
hook point, sell off, gravitate into it, sell off. Structure, very clear, sell off. It's beautiful just looking at it.
Yeah.
So
okay.
Yeah.
So that's interesting, guys. You've heard it from Kev's mouth to your own understanding. Because of time, I don't think I'll jump into my own analysis, but we'll do this more often than not. No. I was enjoying it. It's all the time. It's people watching me what I do, students watching what I do. So also sometimes I like being the student. Trading, like we keep saying, it's all about being open-minded. Learn from different approaches. I don't believe it's a one way to make money. It's always different ways to make money. So next time we'll figure it out. Next time. Today, guys, you've seen it from Kev, and we've answered questions. You've given us a good perspective, and next time I'll pick it up also. And because mine are very few, I think next time we can start with mine. But we'll still do more of this. You can comment below. I think if you get us to 100 likes, we'll do another one. I see people say that. So please like and comment below. If you think your approaches were similar, also give us a thumbs up downstairs, because my approach and Kev's are almost the same, almost similar. That's why you can see we resonate. We're just like, okay. Because you're heavily looking for direction, direction of trend. I'm heavily on that. Now, whatever happens in between, because personally, I believe markets is moving in a direction of, it's important. Like for me, I believe we've really lowered risk by first finding the direction of the trend.
Trend is your friend.
A trend is your friend. That thing when they say it, it's not just a textbook quote. It's a true practical thing. Find the trend. Now, once you find the trend, now we're looking for those, what I personally call impulse correction in the direction of the trend. Now, the corrections are where now the game gets tricky. It's a matter of now finding the patterns that now, like what just Kev has shown us, coming back to this hook point, getting a correction, but the whole bias, because in that bias, you're just looking for down sells. Yeah, you're not looking for anything. So same thing with me. And I'm sure a lot of you resonate with that. And comment below. I'd like to see your comments. This has been an interesting market collab analysis. And I look forward to doing this a lot more with a lot more people. You've enjoyed it?
So much.
Picked your brain?
Yeah, just a bit. But
which is good to pick your brain, because the reason I do it is not like to intimidate or bully or anything. It's just to solidify for you to give me what you really understand in the markets. Or because sometimes I get that a lot from my students. Kitambo, especially when I'm starting out, some things hadn't solidified in my head. So when I'm teaching, someone asks you a question, then you're like, you're 50-50, you're not sure about it. You go do research. It's a good thing they say that, because you go do research. Next time you have the answers. So that's what we're basically doing here, just to understand your thought process and approach, whether you've solidified it, which for me, that's a good tick. You've really solidified what you do. So without talking much, I believe this video is already an hour plus long. And I hope you guys take the time to watch it till the end, because there's a lot of gems you can learn from it. See how Kev breaks down from 28 pairs to now having a watch list of only 3 pairs per day, which will end up only taking one or none at the end of the day, unless it ticks all the system checklist and scenarios that it's looking at. But so like I said, give us 100 likes, comment below, let us know your thoughts, and next time we'll do a better, more in-depth, this has been in-depth, but we'll do much more of this, and maybe later on even bring Ken, Taras, other people on board. We can do a table, round-up table analysis. You never know. Trading, there's a lot of growth. Trading is fun. If you've seen what Kevin has done, he enjoys it. When you hear someone says, look at that beautiful chart, beautiful pattern. And if you watch a lot of my videos, I keep saying that a lot. This was a beautiful pattern. Now, that's the passion that we want to bring out of each and every individual and trader out there. So without talking much, like I always say, stay woke, stay financially literate. May the peeps be with you. We'll see you next time. Peace. Anything you want to say?
Peace.
So guys, see you soon.